Hello and welcome to ET Auto Big Bite, a show that brings industry top leaders. Today, my guest is Mr. Harish Laxman, Vice Chairman, Rane Group, and former President of Auto Component Manufacturers Association. Rane Group has returned, or you can say, revigorated itself with a profit of 20 crore in the Q1 of FY 2021 compared to a loss of 84 crore in the Q1 of FY 2020. Of course, it was triggered by the pandemic-led slowdown. But now the group is having an ambitious growth plan for this year. The company has been trying to look at inorganic growth expansion in the last 3-4 years. It acquired two companies, one in the US, it's a die casting company, the other one in the telematics space. The company's ambition in terms of acquisition continues very strongly. We would like to understand from him how does it look like after post pandemic and what has really stemmed the company in terms of announcing another acquisitions in the last 2-3 years. Thank you so much, Mr. Lakshman, for joining ET Auto. First of all, just want to understand the entire industry was marred by the pandemic. We saw that your revenue from the peak of about 5,300 crore has come down to 4,000 crore. Just want to understand what were the really, factors that impacted you and how do you want to overcome them this year?
So, hello, Nabil. First of all, thank you for having me in your show. It's always a pleasure to interact with you. So, as you rightly pointed out, the pandemic has impacted significantly. But I'd like to go back a little bit even before the pandemic. If you look at 2018-19, that was the record year for the entire Indian automotive segment, whether it was passenger car, commercial vehicle. And these two are being a significantly large segments, as well as two-wheeler. 18-19 was a very, very good year. And even before the pandemic started, the slowdown had started in 1920. And actually, the industry had 6 consecutive negative growth or degrowth for 6 consecutive quarters. And then COVID hit us in March of 2020. So the industry was already going through a difficult phase, on top of which COVID impacted. And I think COVID, enough people have talked about how it impacted the country and also our industry. Now, the good thing was none of us anticipated last year, when I'm talking of 2021, that once COVID started, wave 1 started going down in October, November, nobody forecasted this kind of growth coming back in the sector. So Q3 and Q4 of last year was actually quite positive and beyond more than what most of us expected in the industry, and Q4 was quite good. Now, unfortunately, the wave 2 took away that growth, and as you know, in the Q1 results, while obviously significantly better than last year Q1, it was nothing compared to Q4 of last year. And also the anticipation we had. And that is largely due to wave 2. But having said that, I think I'm quite optimistic about this coming year. Of course, with the caveat that, there is no wave 3. And even if there is a wave 3, the wave 3 is much lower than wave 2. I think as long as the country manages that, I think that we will have a very good automotive year, because there is strong demand across all segments. Passenger car, farm tractor has been very good right through. Two-wheelers is also slowly showing signs of picking up. But commercial vehicle, while there is marginal improvement, I expect Q3 and Q4 of this upcoming year, the demand will improve even further.
Mr. Lakshman, we have seen the impact of slowing economy that you rightly pointed out started in after FY19. Just want to understand, it shows a little bit of more impact on your group. Several companies have been able to assuage the impact that has not been that harsh. Is it because you're too much of focus on passenger vehicle, your large share of market, went into one area? Is that the reason, or how do you?
No, I'd say we are, as a group, we are reasonably diversified across all segments. Of course, passenger car is the largest segment, more than 60% of our revenue comes from that segment. And then followed by commercial vehicle, farm tractor, and two-wheeler being much smaller. Yeah, but yes, so at a macro level, when you look at it, the impact and the hit that had on the passenger car segment, that has impacted us. Aftermarket also, we have a reasonable presence. Out of our total group revenue, about 12% comes from aftermarket. So that also, because of COVID, got impacted significantly. We also have exports contributing about 20% of our group revenue. So in fact, I would say that in Q3 and Q4 and even Q1 of this year, exports has helped us to some extent, because both Europe and US, the demand has picked up to good levels, going back to the pre-COVID levels. Of course, I must say the chip shortage, which is a recent phenomena, is impacting some of that in the coming quarters.
Just want to understand, because entire auto component industry is bullish about exports. We have seen the revenue from exports has jumped a lot, but even in component industry versus vehicle industry, if we see, the vehicle industry's export surge has been very huge compared to the component industry. What really held back the component industry in terms of exports? Why it is not in the similar? Because we have seen in a vehicle segment 200, 300, 400% growth during this slowdown time, but in component we didn't see that kind of surge. Why?
No, the drivers, the economic drivers for exports in the OEMs, vehicle manufacturers, and component industry are very, very different. The OEMs, many of them, they're either making vehicles in India specifically for other markets. In fact, their investment strategy itself is based on that. You take, as an example, you take Nissan as an example, or even Ford, even recently Volkswagen. They have made investments in India with a clear plan of that investments going towards the market segments that they have identified. Whereas our exports is not at all linked. There is some linkage, but by and large not linked to the Indian OEMs and their exports. The majority of the auto component manufacturers are exporting directly to other OEMs, or even the same OEMs, but unconnected into Europe or US. Now, coming to your question, so I'm not able to exactly understand why the vehicle manufacturers went up by 200-300%, but it could be because in those countries that they are being exported to, the market picked up quickly, or they might have been a new vehicle that got launched either by Volkswagen or Nissan that added to the volumes. That could have happened. But coming to the component industry, for sure, we got impacted in exports last year, and that is largely due to COVID. Both take Rane Group, for example. Our biggest markets are North America, US, and Europe, driven by Germany and the German customers. So a lot of the export got impacted due to COVID. But I would say that if you ask me which segment I'm optimistic about, I would still say it's exports, because even in the last 2 years, even from a Rane Group perspective, I can tell you we have won a lot of new business that we will start exporting in 22 as well as in 23. So
what kind of revenue do you expect from the exports going forward?
So as I said, today about 20% of our revenue is international business, right? So if last year we did about 4,100 crores, so 20% of that is international business, and that is going to continue to grow at about 10 to 12%. So and we are also looking at target of moving our export portfolio from 20% to about 25%. So of the group revenue. So you can imagine if the group is going to grow to, let's say, 6,000 or 7,000 crores, 25% of that will be coming from the international business. Of course, when I say international business, this includes are the investment that we have in the US.
You operate in a business like steering system, you operate in airbags, which has a lot of influence when it comes to chips and all. How has it impacted your business in
Yeah.
supply side?
Yeah, no, so definitely there has been an impact, unfortunately. And the problem, Nabil, is that it's not going to go away soon. I'm already seeing, both in terms of the coming quarter, Q2 as well as Q3, despite robust overall demand, both in domestic and export segment, we are not going to be able to achieve the numbers because of the chip shortage. And I personally see the chip shortage problem continuing till early part of next year. So going into 22, this problem is going to be there. So while sales growth will be there, I don't think we are going to be able to realize full potential because of this chip shortage. Unfortunately, I think this is a global problem, and there's only so much the industry can.
What kind of impact do you see in terms of demand, if you could put a number to it?
So it's very difficult to calculate, because the chip shortage situation is continuously changing, and also it's a question of what capacity is getting booked. Right now I'm told OEMs, suppliers, tier one, like the global tier one, like a ZF, Bosch, and vehicle manufacturers, they're all booking chip capacity for January of 22, March of 22, etc. So it's difficult to predict, but if you ask me to get a number, I would say about 5 to 7% is the loss in sales due to chip shortage.
You think the worst is over because of in terms of chip shortage that we have experienced, or
no? As I said, I think this is going to continue till Q1 of next year. So April, May, June of 22. By that time, I think it will ease out. Is the general understanding that I have based on talking to some other international colleagues.
You have three companies operating in steering space, company in seatbelt and airbags. You have a company you acquired in US also in 2018, that is die casting. So only, do you want to further diversify or get into a new area which could assuage the impact for you, and what's that strategy going to be?
No, so a couple of things. One is I'm talking about the electric vehicles and what is happening there. Obviously for us in our portfolio, our engine valve business is at risk in the long run, right? And that is about 10% of our group sales. Today, 10% of our group revenue comes from engine valve, and clearly we are seeing a long-term threat there. But other than that, we see a lot of opportunities. In fact, a lot of our businesses are winning business in electric vehicle platforms, not only in India, largely in export also. And we have already started production for a few EV vehicles in Europe and US, and there's a lot more business coming in. So I want to tell you that the existing product portfolio, we are quite optimistic about organic growth as well as penetrating more electric vehicles. Then the second is adding products. So that is a part of our core strategy. Die casting was a business that we got in 2008. Then in 2012, we added our airbag portfolio. Then in 2016, we did the US acquisition for increasing our die casting business. Then in 2017, we acquired this telematics company. But unfortunately, in the last 3 years, we have had setbacks, and COVID also playing a role, and some of the other acquisitions, the plans didn't go exactly the way we wanted, and on top of it, COVID had happened. So therefore, last 2-3 years, we have not added anything to our portfolio. But going forward, adding products to our portfolio, either through in-house R&D or through strategic acquisitions, will be a core part of our strategy, and we will continue to do that.
How do you want to see, you mentioned about engine valves that is going to trim down because of obviously electrification. What's your guidance in terms of what percentage of your business will be constituted from engine parts, engine valves that you're talking, and where will you take that business to? Means right. Which area you will expand further?
So, as I mentioned, 10% of our revenue or group revenue is at risk, but it's a long-term risk. I still believe that while electrification will happen, and definitely the acceleration has picked up in the last 12 months, but in a country like India, with a huge growing automotive segment, both passenger car as well as two-wheelers, while electrification penetration will happen, but it's not as though IC engine production will drastically drop down. That is probably more applicable in Europe, for example, where the IC engine reduction will be a huge percentage. Whereas here, if the automotive industry is going at 10-12%, even if electric vehicle is growing at 30-40%, it's not that IC engine will go down significantly. So I still expect till 2030, 2035, a reasonably strong demand for IC engine vehicle, and therefore the valve business also, there will be demand. But yes, beyond that time frame, there will be a inflection point after which the electric vehicles will completely take over. By that time, we need to find a solution for this business.
What's your guidance for the top line of Rane Group in the next few years? And what kind of capex are you looking at? Yeah. And how do you want to deal with this electrification drive?
We are looking at without keep having acquisitions in mind, we are looking at about 11% compounded growth in the next few years. This is largely driven by our domestic revival as well as the enhanced export business. And for that, we are starting to invest. See, we must understand that last 2-3 years, the capacity utilization was low because of COVID, and we still did not reach the 18-19 level. But all things going well, and if wave 3 is not significant, I expect that this financial year we will get back to where we were in 18-19. But the capacity utilizations have increased, and also we have won a lot more new programs for 23-24. So capex investments are going on. So for example, I expect we will start investing about 275 to 300 crores this coming year, compared to last year. Even though COVID had happened, we still went ahead and invested. It's not that we didn't make. We invested about 150 crores last year.
This 250 crores that you are going to invest, it is going to be in R&D, product development, or also in capacity? I don't think it is going to be in capacity.
No. A lot of it is also capacity. A lot of it is capacity because of two reasons. One, the export business is growing significantly for us, and secondly, I expect the markets to come back to near peak levels further part of this year. So we will be spending significant in capacity, followed by some R&D investments and some quality related investments.
How much are you going to invest in products for electric vehicles especially? Do you have any plan to get into that space?
As I said, the good thing is 90% of our group revenue, the content is applicable for an electric vehicle.
Like steering and all.
Correct. So steering, seat belt, die casting. In fact, the aluminium content actually goes up in an electric vehicle even more than an IC vehicle. So which is very good for businesses that are in the aluminium related business. So the investments, that 290 crores, 280 crores that I talked about, some of them are for programs going towards electric vehicle.
Okay. One of the strongest strategy was to continue aggressive acquisitions that we don't see happening in the last 3 years. Do we have some news this year? Are you looking at some companies?
So, as I said, acquisition is definitely part of our growth strategy. And last 3 years, because of the problems, we took a decision not to.
But that was the best time. In the depressing time, you get the best value.
That's a fact. But because of the challenges that we had with the previous 2 acquisitions that we did, we decided to take a pause. But it will start again. There's no definite timeline, Nabil. These are opportunities that come up, and then they are complex. A lot of negotiation needs to take place. So we continuously are looking at opportunities.
How do you see your ROC, and what's the situation in terms of debt, and how do you want to work on that?
Yeah. So in terms of ROCE, we like to see all our businesses have an ROCE upwards of 20%. However, not all of them are above 20%. And of course, ROCE, looking at the last few years, ROCE data is also not very meaningful because of the pandemic. But 20% is our target, anything upwards. Some of our businesses are much higher than 20%. Some are, in the 10 to 20 range. And somewhere we have problems. It is in the, 11, 12%. Some are 16, 17. But we are working to take all our businesses to at least 28, 18 to 20 in that range, if not higher. And on debt, we are fairly conservative. Our debt to capital employed, our internal target is never to go more than 50%, and we try to keep our debt to capital employed ideally between 33 and 50, and we are still within that at a group level. There are some businesses where the leverage is slightly more than 50%, but at a group level we'll still be at slightly below 50%.
One last and final question. We have seen a lot of transition toward electronic content. A lot of softwares are being used, and we see a lot of passenger vehicle manufacturer or the overall vehicle manufacturer directly engaging with their software partners. And somewhere looks like, the tier one suppliers business seems to be at a corner. How do you see this? Do you think this trend will change, or this will further aggravate the situation for the tier one suppliers? Or how are you gearing up to deal with this situation?
Definitely what you're saying is happening. I think the amount of software content is going up significantly in a vehicle, even regardless of electrification. And once you bring in electrification, it becomes even more. But at this stage, if you look at it, most of the companies that are involved in all this are the global tier ones. It's the Bosches, the ZF, the Densos of this world. And they are more and more focusing on, software, system provider, etc. So I see this as an opportunity, where a company like Rane, for example, we have a partnership with ZF. So while ZF is spending a lot of their money towards software development, we are getting better and better at making, high quality components. So some of the components that traditionally maybe ZF was focusing on, now their focus is more on software. But at the end of the day, the vehicle needs these components. So if you have a very good, high quality, efficient manufacturer like Rane, we will work with some of these tier ones to provide these parts. So I see this as a big opportunity in the coming years. Whether Rane will get into software as well, that is something we are still reviewing. There are still a lot of challenges. Not that it cannot be done, but there is so much disruption happening, and a lot of the big players are spending a lot of money. So we are still trying to understand that space and look for opportunities. But our focus is on trying to get components for some of these large tier ones in addition to vehicle manufacturers.
Well, when is your target 10,000 crore revenues? When do you expect that to happen? Because you are aggressive on acquisition in organic growth also. So just want to understand.
Yeah, so we haven't set a date, Nabil. I think we are more careful about getting it right, because ultimately we want profitable growth, and just going after growth. And sometimes you can end up making mistakes. So our objective is to make sure we get profitable growth and not just growth. And honestly, in fact, even the one acquisition that we did in the last few years, we found that it was not the way we had intended it to. So we will definitely take our time, but 10,000 crore and plus is definitely a target that we have.
One last question. How is your acquisition of US company and this telematics for you? I think is slightly better than the US one. How are you planning to revive that? What is the situation currently, if you could
so the US business, I think the worst is definitely behind us. Last year was extremely difficult, also because of COVID. And, we also bought a distressed asset. So while we thought we can turn it around in 3 or 4 years, that became a challenge, and COVID has also happened in the last 2 years. So now, unfortunately, it's taken us almost about 6 years. But the good news is operationally, the business has turned around. and the new order book is also looking much better than it was 2 years ago. So
when do you expect to turn green there?
In about 2 years' time, we will expect to make consistent profits. I mean, but even from a cash loss standpoint, I think that is behind us. On the telematics business, we are looking at, it is a exploding space. Of course, there are a lot of players, but we are using the Rane contacts and connections to aggressively reach out in the logistics and transportation sector to grow the business.
Thank you so much, Mr. Lakshman, for joining ET Auto Big Bite. Thank you so much once again.
Thank you, Nabil.